I'm done with Psquare. I'm not interested in Psquare anymore.
Imagine building a business with your brother, the business now worth millions. You travel together, you make money together, you become famous together. And then years later, you find yourself fighting that same person over money, ownership, accounts, contracts, and who was actually entitled to what. This is essentially the money story behind Psquare saga. But before we continue, let's watch this video.
The next day being Saturday, Joe then now sent for my manager MM and the guy that was managing Paul, Show, called them together. We all went to Paul's studio and I said, oh, that Peter I get your point. However, you don't want what has happened before to happen again, but no problem. What will happen is that he's going to bring these two individuals to the team. I said, to the team to manage what? I'm not trying to stress them more, but you need to give me a reason. And I said, oh, that him, Jude, will be the official manager. My manager, MM, will be assistant manager. And Show, Paul's manager, will be road manager. He offered them money, how much he will be paying them every show. I started laughing. Paul, my manager, and Paul's manager even started laughing. Paul started feeling like it's becoming an embarrassment moment for Jude. And I called me and said, he doesn't like this thing. Why that was going on? Paul says, is it because of sharing formula? Because in share, we share 3 ways. In fact, we don't even share 3 ways. How we share money is, I'll come and say, hey, I need to pay my kids' school fees. How much? Maybe it's 12 million naira. Jude will sign a check, 12 million and give me. Sign 12, Paul. Sign 12 for himself. That was how we were running Psquare. Oh, Peter, you want to buy this car? Take. Paul, take. Him, take. Now, Paul now say, you know one thing, it is because of the sharing formula, Peter. So I will stop all this. Me and you type 5 Jude go take that. I said, Paul, no. Take that to do what? To manage one Psquare. I'm not interested.
Now, before you pick a side, I want you to listen carefully, because this video is not about deciding whether Peter is right or Paul is right. It is not about judging Jude, and it is definitely not about turning someone's family crisis into entertainment. We are looking at something much more important. What can an ordinary person learn about money from one of Nigeria's most famous family business disputes? Because you don't need to be a celebrity to make the mistakes we are about to discuss. You can make them with your brother, you can make them with your wife, you can make them with your best friend, you can make them even with your business partner. And some of these mistakes can cost you more than money. They can cost you relationship. So let's get into it. First, let's look at what actually happened. If you remember Psquare, Peter and Paul Okoye were one of Africa's biggest music duos. The twins built Psquare together with their older brother Jude, playing an important role as their manager. Now, the group became extremely successful, but behind the success were disagreements about management, money, control, and the direction of the business. Just like you heard in some part of the video, the brothers eventually split in 2017. Peter became Mr. P and Paul continued as Rude Boy. Then, after about 4 years apart, they reconciled in 2021 and Psquare returned. Many people thought the story had a happy ending, but in 2024, the brothers separated again. This time, money and business structures became a major part of the disagreement. Peter eventually petitioned the EFCC over allegations concerning money and the management of Psquare related interests. Now, in 2025, Peter testified in the EFCC case involving his elder brother Jude. According to a report of his testimony, Paul said that Jude had been the sole signatory to some of Psquare's accounts, and that there were periods when he struggled to access money he believed was due him. Peter also alleged that another company, Northside Music Limited, had become involved in collecting royalties connected to Psquare. Court reporting stated that the company was registered with Jude and his wife as shareholders, with Jude holding 20% and his wife 80%. So let me make something very clear now. These are allegations and ongoing legal matters. They should not be presented as established facts until the courts determine them. And that is important because the purpose of this video isn't to convict anybody. No, it is not. The purpose is to learn, because whether every allegation turns out to be true or not, the situation exposes some powerful financial principles. And here are 7 of these principles. Now, lesson 1. Never let trust replace accountability. Note that. This may be the biggest lesson of them all. One of the most dangerous sentences in business is, "He's my brother, I trust him." You know, you usually say that. Or, "She's my wife, I don't need to check." Or, "That is my best friend, we agree up together." Listen to me. Trust is good, but trust without accountability is dangerous. You can lose somebody and still check the numbers. You can trust somebody and still request financial statements. You can work with your brother and still have contracts. You can work with your wife and still document ownership. Why? Because accountability is not an insult to trust. Accountability protects trust, and that is the truth. Imagine you run a business with your brother. The business makes 50 million. Your brother manages the money. Every month he tells you, "We made 4 million this month." You accept it because he is your brother. You don't see the bank statements. You don't know the expenses. You don't know what contracts were signed. You don't know what assets the company owns. You don't know who the shareholders are. Years later, there is a disagreement. Suddenly you discover that you don't actually know what happened to your own money. The problem didn't begin when disagreement started. The problem began years earlier when trust was allowed to operate without transparency. So here is your rule. Trust people, but verify systems. Lesson 2. Never build a business without clear ownership. Now, this one is huge. A lot of people start businesses informally. "Bro, let's do this together. Let's open an account. We'll share the money later. You handle the operations. I'll bring the capital. We're family. We don't need paperwork." That arrangement can work when the business is small. But what happens when the business world becomes 100 million, 500 million, or even 1 billion? Suddenly, everybody wants to know who owns what, who has the signing authority, who owns the intellectual property, who owns the brand, who owns the equipment, who owns the company, who receives royalties, who can withdraw money, who can make major decisions. What happens when one partner dies? What happens when someone wants to leave? What happens when brothers disagree? What happens when one partner gets married? What happens when a spouse becomes involved? These questions should be answered before the money becomes big, not after the fight starts. All right? If you have a business with someone, especially family, document ownership, profit sharing, responsibilities, decision-making authority, access to financial information, exit terms, intellectual property rights. And please, don't just download a random agreement from the internet. Get proper professional advice, because the document that costs you money today may save you millions tomorrow. Lesson 3. Know how much your business is actually making. Here is another painful lesson. Some people know how much money enters their personal bank accounts, but they don't know how much their business makes. Those are two completely different things. If your business generates 100 million in revenue, that doesn't mean you made 100 million. You need to know revenue, expenses, profits, taxes, debt, assets, liabilities, cash flow, royalties, and distribution. If you're a partner in a business and you simply receive whatever someone tells you your share is, you're financially vulnerable. You should be able to answer, how much did we make? How much did we spend? What do we own? What do we owe? How much is my share? Where is the money? All right, this is especially important when your business involves digital income, music royalties, YouTube revenue, affiliate income, licensing, streaming, brand deals, digital products, online businesses. All right, money can come from several platforms and countries. You need systems that allow you to track every stream, because here is the thing: if you don't understand your numbers, you don't really control your business. Lesson 4: never give one person total control of your money. This is a principle that applies far beyond celebrities. Imagine a company where one person controls the bank accounts, the passwords, the accounting, the contracts, all right, the payments, the records, and the financial reporting. That is a dangerous structure, even if the person is completely honest. Why? Because there is no independent verification. A better system separates responsibilities. For example, one person handles operations, okay? Another handles accounting. Major payments require approval. Bank statements are accessible to the relevant owners, okay? Accounts are reconciled regularly. An independent accountant reviews the books. Major contracts require proper authorization. This is called internal control. And don't misunderstand me. Internal controls are not built because you expect your partner to steal, okay? They are built because good systems don't depend on human perfection. Your business should be able to survive disagreement. It should be able to survive death. It should be able to survive divorce, okay? It should be able to survive betrayal. It should be able to survive the founder leaving. That is what a real business system does. Lesson 5: family is not a substitute for business structure. This is probably one of the most Nigerian lessons from the entire story. We love family, and that is a beautiful thing, okay? But sometimes we make a mistake. We think because someone is family, business rules don't apply. Your brother can be your brother. He can also be your business partner. Those are two different relationships. As a brother, you may forgive him. As a business partner, you need documentation. As a brother, you may say, don't worry about it. As a business partner, you need, let's put that in writing. Okay? As a brother, you may not ask for receipts, but as a business partner, you should. Because when the relationship is good, everybody complains about the paperwork. But when the relationship breaks down, the paperwork becomes the memory. And here is something very important. A contract doesn't mean you don't trust your family. It means you understand that family relationships and business relationships operate differently. Please, don't wait until there is fight before you look at your money. This is one of the biggest mistakes people make. They don't check anything while everything is going well. Then a disagreement happens. Suddenly they want to know, what assets do we have? How much money came in? Who owns the company? What contracts were signed? Where are the records? What happened to the profits? Who has access to the account? Okay, by then you're trying to reconstruct years of financial history. Don't wait. Do a financial review while everybody is still happy. If you own a business, schedule regular financial reviews, monthly, quarterly, annually. Check your bank statements, accounting records, contracts, tax records, all right, assets, loans, investment, shares, intellectual property, digital accounts, royalties, and outstanding obligations. The best time to discover a financial problem is before it becomes a fight. Lesson number 7: don't sacrifice financial clarity for family peace. Now, this one is very sensitive. Sometimes people say, I don't want to ask too many questions because I don't want problems. I don't want to challenge my brother. I don't want my wife to think I don't trust her. I don't want my friend to feel offended. So they remain silent. Years pass, the money gets bigger, the unresolved issues get bigger, and eventually the problem explodes. Boom! Peace is important. But there is a difference between peace and avoidance. Avoiding a financial conversation doesn't create peace. It only postpones the conflict. Have difficult conversations early. Ask uncomfortable questions while the relationship is still healthy. If something doesn't make sense, ask. If the numbers don't add up, investigate. If the ownership structure is unclear, clarify it. If you don't understand a contract, get advice, because sometimes the conversations you are afraid to have today is a conversation that could save your relationship tomorrow. But here is the biggest lesson. When I look at the Psquare story from a financial perspective, I don't think the biggest lesson is don't trust your family. No, that is too simplistic. The lesson is love people but build systems. Trust people but verify. Work with family but document. Build wealth together but know who owns what. Share responsibilities but don't give one person unchecked control. And most importantly, know your numbers, because money has a strange way of exposing problems that people successfully hide when there isn't much money involved. Two brothers can sit together and laugh over 100,000. All right. But when the business world becomes hundreds of millions, suddenly questions that were ignored for years become extremely expensive. Your money should not depend on someone else's memory. Let me give you a practical example. If you and your brother run a business, don't just say everything is 50-50. Write it down. If your partner is entitled to 30%, document it. If your manager receives 10%, document it. If you own the brand jointly, document it. If one person controls the account, create appropriate access and reporting. If money comes in from multiple sources, track every source. If someone spends business money, record it. If you lend the business money, document it. If the business buys property, establish who owns it. Okay? If the business owns intellectual property, establish who owns it. I'm telling you practical things that you should do early, and review everything periodically, because wealth isn't just about making money. It is also about knowing where the money is, who owns it, and how it is protected. The Psquare story is a warning for every entrepreneur. You don't need to have millions of fans to learn from this. Maybe you run a fashion business with your sister. Maybe you sell products with your friend. Maybe you own a church with partners. Maybe you and your wife have a company. Maybe you are building a startup with two friends. Maybe your father handed to you a family business. The principles are the same. Don't let closeness replace structure. Don't let success make you careless. Don't let trust make you financially blind. And don't wait until there is a fight before you start looking at the books. So here is my final thought. The saddest part about many family business disputes is that the money is often not what people lose first. They lose trust, then communication, then relationships, and sometimes even after the money is recovered, the relationship never completely returns to what it was. Now, siblings, cousins are having issues. That is why financial intelligence isn't just about learning how to make money. It is learning how to protect money, structure money, communicate about money, and manage money without destroying the relationships that help you build it. So the next time you hear a celebrity money story, don't just ask who is right. Ask, what can I learn from this? Because somebody else's financial mistake can become your financial education. And if you're building wealth with family or friends, remember this: trust is valuable, but transparency is priceless. And good financial systems protect both your money and your relationships. If you found this video useful, subscribe to the channel, because on this channel we are going to look at the money stories behind celebrities, entrepreneurs, businesses, books, and everyday people, not just for entertainment but for the financial lessons hidden inside them. I'll see you in the next one.